Hello, Mavericks. You know what day it is. It is the Currency Room day. Let's go ahead and look back on this week. In this session, we're going to go through the news of the week, and we got some geopolitical tensions flaring up at the end of the week, causing some major moves. We're going to score all the currencies from +3 to -3, and that's going to tell us where our best trades are for the week.
All trades and analysis in this video are intended for professional traders only. This content does not constitute financial advice and is for educational purposes. This video is being released after a short delay due to Compliance Department review. Maverick members receive this content immediately as part of their daily trading resources. If you're ready to level up, consider joining Maverick Currencies. Our traders trade firm capital and keep 70 to 80% of profits. You bring the skill, we provide the backing. Let's get into today's market recap and see how the pros are trading the currency markets.
Well, we had a pretty boring week until Thursday night. Thursday night, we had the Israel attack Iran, starting what looks like it could be a very major conflict. Whenever we see these geopolitical tensions, it's always a risk-off move. So where did people run and hide? Well, they sold the Aussie, they sold the Kiwi, and they went and hid in the Swiss franc and the euro this time. The euro and Swiss franc is what got the safe haven. The yen bounced back a little bit. We're seeing the money go into the European currencies. That's what we're seeing right here. So until that changes, that is the risk-off move going forward, is euro, Swiss franc, if there is going to be more geopolitical tensions. Now, look, we have no idea where this is going to go. This is a fluid situation. Whenever we have these situations, volatility. And volatility means big moves up, big moves down out of nowhere. Like, these moves will come out of nowhere. So if you are trying to trade in a predictable trading environment, this is not it. This is not it. If you are a slow and steady wins the race kind of trader, this is not your environment. This is an environment that you need to sit out or go to a different strategy that allows you to be a little bit quicker in and out. That's where we are at the moment. Anytime volatility spikes, it's bigger moves, quicker moves, and lots of whipsaw, lots of up 1%, down 1%. Those things will just kill anyone with tight stops. You've got to treat this market a little bit differently. We did see the dollar continue to sell off. And I actually do like the dollars are short here. It looks like the Fed is likely going to cut interest rates this summer. I was pretty skeptical about that, but the last data we've had has been pretty ugly. And let's talk about that right now. Here's the data we got last week. We got the CPI well below expectations, the core 2.2% below expectations, followed up by the PPI. Remember, last month the PPI was negative. This month, positive 0.1. These numbers are really giving a green light to the Fed. Ankit, I know you and I have been pretty much in agreement about the next move in the Fed being a far way away. I no longer think that. I think the Fed is going to cut rates over the next meeting or two. What do you think?
You know, Rob, that's a great question. And I think the goalpost just keeps getting moved. Because again, if you look at the last 2 weeks of data, we had that moment where, we got that very good jobs report. And then suddenly, the traders start to, push their bets to later in the year. And then when the data start to come out weaker, then the goalposts get sooner. So I feel like that's just really where we are. Things are just getting moved back and forth. But despite of seeing the weaker data, the only positive thing we had in the last 2 weeks was that jobs report. But we have seen economic data was getting weaker. Third straight weekly the increase in the unemployment claims. So, there's definitely cracks up there. But now when I take a look at bond market, Rob, I don't really see that kind of craziness there. Every time we the bond yields get pushed down, they do go right back up. So I think this is going to be this ongoing thing where the goalpost is going to keep moving back and forth until we really start to, get more worse news, and then the bond market reacts to it. I want to take everybody back to last year. Last year around the summertime, in August, July, August is where economic data started to weaken, and we actually saw a pretty big drop in the bond market and we got a big drop in the dollar. And right now, I'm not seeing that. So I think this is something that we don't want to get ahead of ourselves. I think this thing can go back and forth depending on how the data comes out.
I totally agree with you in the markets getting ahead of the economic news and then having to be pulled back. I think you're exactly right. I think right now people are looking at it saying, hey, the dollar is weakening because we think there's going to be a rate cut. One or two positive reports, and that's going to get pushed out again. Last bit of economic news I want to talk about is GDP out of the UK. It was much, much weaker than expected, and we'll take a look at the pound and how it performed this week as well. Let's take a look first at just overall numbers. You can see S&P was basically flat by the end of the week. I had a few days up, few days down, flat. Crypto, boy, that's about as flat as crypto could possibly get. Look at these moves. This is where the moves were this week. Gold, safe haven run, getting back close to some highs, and oil hitting the highest it's hit this year on these tensions. That oil is definitely going to be a volatile trade here with this military action going on in the Middle East. We take a look at the charts. Now, this is where I always love to say this. We talk about all these things happening, and Anka and I give our opinions, and in the end, we say, look, that's just cocktail talk. If you woke up from a coma, you've been in a coma for 10 years, and the first thing you did was look at this chart. You don't know who's the president. You don't know who's at war. You don't know anything. You look at this chart. What do you analyze? That's how you have to look at charts. You have to forget all of your biases, all of your opinions, and look at the chart and see, hey, does this match my opinion? So if you were thinking, oh my gosh, I can't believe this war over in the Middle East and everything's going to fall apart and we're going to crash. Well, guess what? If you check that at the door and you come to the chart, this chart looks great. This chart looks, and look, this is a candle. Today's candle isn't even a bearish candle. It's not even a red candle. This is the most minor of minor pullbacks. When there was some big news that could have knocked this market down 2, 3, 4%, it barely pulled back. So look, I will agree with you. If you want to sit down and have some drinks and we talk about how bad the world is right now and all the possible things that could happen wrong, you know what? We would have a great conversation and we would make a lot of sense. Here's the problem. That doesn't make you any money. Trading the charts make you money, and this says the bull market is still intact. Now, what has to change for it to be not as intact? Well, the first strike against it is going to be to trade below the 20-day moving average, which that could happen in the next week. Okay, if it happens in the next week, all of a sudden I'm now no longer super bullish. I'm just moderately bullish. That's where I shift. If we break through the 50-period moving average, then I get to, but I can't sell yet because I need to get a bounce and then a failure to new lows. That is when I go bearish. Until then, I do not go bearish, even if I feel bearish. I've said this before, and I'll say this as many times as I can. One of the things I'm the most proud of as a trader is I no longer trade my opinion. I used to always just trade my opinion. Now I can have an opinion on something and trade the exact opposite way because that's what the chart says. As far as what moved last week, Euro Swiss franc. This was the safe haven here. No longer the US and the dollar, the yen and the dollar is a safe haven. I think this is going to continue. I think this is where money continues to go. That negative GDP out of the UK probably takes the pound out of safe haven currency status. And you can see Aussie Kiwi rolled over. I think this is where you want to continue to look. Euro Swiss franc and Aussie Kiwi paired up against each other. The other place I still think is worth looking, I still think the dollar yen is a great trading pair. It's not trending, but it's having a big range that I think if you're looking to play something that has a big range, I think that's where you go hunt. In cryptos, we just had pullbacks across the board, but very mild. These are very mild pullbacks from what we've seen. We'll take a look at all these charts here in just a second as well. Anki, you mentioned that bond market and Friday's price action. We were starting to get down to the support point, down to that 50 period moving average, and this bullish engulfing candle has just eaten that up. I agree that the dollar is unlikely to weaken significantly if it stays above 4.3. I think the dollar is likely going to be range bound at best. We've seen it's low basing, but I don't think you're going to see a big push down with these bonds holding on like they are. If we get a rally back in the dollar, I'd love to short it. But until then, this bond market is telling me that it's probably going to stick around its current prices. What do you think about that analysis with the bonds? I know you do a bunch with bonds.
I agree. I mean, so one of the things that I've been talking about lately is just a big disconnect that we have seen this year between the bond market and the US dollar. And I think this is where dollar is clearly an underperformer and it's not really following the correlation. But what we've seen is that if the bond's really falling, then dollar is just really taking a bit of a dive. And as the bond and yields sort of rally, dollar's kind of holding in. So I think that's just really what I'm seeing here. We don't have the exact same correlation that we had for the last 2 years, and maybe there's this big disconnect between those two. So I think right now, dollar just underneath it just has a lot of weakness, and while the bond market is kind of holding in there. So. And I think maybe this is one of the reasons why dollar is just not falling apart, but just staying weak. And I think if the bond market gets a little bit weaker, I mean, then maybe we can see a bigger drop in the dollar. But yeah, I think it's just gonna hang in there. Do what it's been doing, where goes down one day, goes up one day, but overall you can see that's gradually weakened. I mean, I don't know if if you look at the numbers, dollar is down like 8-9% so far this year, and that's a remarkable turnaround considering where we were early this year, and we are almost back to the lows of October, where we had that big rally. So yeah, dollar has definitely deflated quite a bit, where you can see that the bond yields have not. So just kind of keep that in mind, is that there's definitely a disconnect.
Thanks, Onkit. Let's move into cryptos. This is the crypto basket equally weighted. And you can see as an equally weighted basket, we've just been basing. We did get to the bottom of that base and put in a rally. So, at this point, cryptos are range bound. As a whole, cryptos are range bound. Individual ones can be trending, but as a whole, you cannot be looking for cryptos to have a multi-week run. That is just not where we are right now. Next week, big week, lots of news. So we've got this geopolitical tensions, and then throw on several central banks, 4 central banks, and we've got just a dynamite week ahead. First one, Bank of Japan. Bank of Japan has actually been one of the more exciting ones lately, but I don't think it's going to be that exciting this time. Of course, we have no idea what's going to happen, but if you're playing in, make sure that you are aware of Bank of Japan meeting on Monday night. It typically comes out about midnight or 1 a.m. Eastern time on Monday night. Next central bank, let's just do central banks first. We've got Fed meeting this week as well. No one cares about their consensus is there's no cut, but people are going to be very interested if they talk about a cut in one of the next meetings. If that happens, maybe we can get a weaker dollar. I don't think that's enough to push it out. We have the SNB coming out on Thursday. We hear from them 4 times a year. They have been ultra dovish with the Swiss franc so strong. I wonder if they try to talk that Swiss franc down, but there's not much they can do with how dovish they are and how strong their currency is. And then we get the Bank of England later that day. So as you can see, really big news around there. And then we have a smattering of GDP reports in there. We've got CPI for the UK. So just check the schedule. There is a lot going on this week, which means lots of opportunity. There's weeks that we talk about being active and being less active. This is one of those weeks where we think being more active makes sense. The moves are going to be there, They're likely to be choppy because volatility is high, but there is lots of opportunity this week. So there's lots of weeks, like I said, we say, hey, sit on your hands. This is not one of those. I'm going to go through crypto first. As a whole, the cryptos are neutral, and I got to say, Bitcoin is neutral. So it is holding this level here. So it looks like in the 105 area is the low end of this base. And I think that is the area, if you are looking to acquire Bitcoin because you think the next move is a breakout to the upside, this is where nibbling at the bottoms of bases ends up being a pretty decent deal as long as they stay in the base. Now, what do I mean by nibbling? Means taking a fourth of a position. Just take a nibble, and then if you get a move up, then you can add some more in a breakout, and if it fails that breakout, you still have a good average price and you don't have to get shaken out. I don't like it for anything other than sideways trading at the moment. Come over here to Bitcoin Cash, same thing. This one's near the higher end of its range, unlike Bitcoin was at the lower end of this range. So for me, just not interested. Get me down into the 390 area, maybe I'll take a look at it. Ethereum is the one that looked like it was ready to go, ready to break out. We got one green candle above it, and then you can see no follow through. No follow through. This is what I'm talking about. When you have these bases and you think the next major move is going to be to the upside, which high bases generally are, I've been talking about grabbing positions down in these areas. So when you do get the breakout and maybe you take another position on that breakout, you now have an average cost that's somewhere right in the middle, not way up here and then you get stopped out by just a normal pullback. I think you want to keep doing that here on Ethereum. The 2,500 area seems to be holding for the moment. Litecoin, totally disinterested. We're now below the 50-day moving average. This is a sell only. All right, let's move into Forex.
All right, well, good. Let's just start with a good almighty dollar. I mean, look at that chart, Rob. This has been, it's much clear. Like, this is where I will say that it looks pretty clear where and how it's heading. And especially the last few days, if you look at what happened back at the end of April, early May, we got to the support and we had a bounce. We got a support, we had a bounce. I mean, take a look at where we are. And, we had a nice clean break yesterday, but then that got quickly reversed overnight. You can see that we're getting a little bit of that geopolitical concerns and the dollar's trying to rise a little bit. But you notice that every green candle are met with a red candle. I'm not really seeing any turnaround here in the dollar. I think dollar just slowly chipping lower here. So, we talk about when sometimes things are sideways, so we can play that support and resistance. This thing is looking a lot clearer onto the downside. The trend score is going lower. It's in a -3. So I think, as long as, we stay below that support line, I think that short dollar, kind of continues. But then if we see any jump off the support, maybe we'll probably scale back on that bearishness. But overall, selling those bear routes in dollars is really the right call here. You can see that it's just not it's not the most volatile currency, just very steadily moving lower. And now when we take a look at the yen, and I must say, Rob, like something definitely changed. We talked about 2-3 weeks ago where we were seeing a bit of the negative correlation. When the dollar was up, yen was going down. Yen was up, well, the dollar was going down. So now we're seeing both kind of acting the same way. So again, yen kind of looks same thing. I mean, I don't mind taking the yen short either. Because again, same thing. This is also showing relative weakness. We have a support there in place that if it rolls over, again, this will be a great sort of an opportunity. But I mean, take a look at the candle for today. I mean, considering what stuff going on in the world right now, and you get that big, reversal candle on this day. Again, that's just telling you that's really where the demand of the money is going. So I do like yen to the downside as well. So both dollar and yen are in the negative list. Now let's talk about things that almost broke out and it just reversed back. I mean, take a look at that candle, and I know this is why I'm a big believer in waiting for confirmation, and especially when you're dealing with these ranges. because you don't know if this is going to give you a false breakout. As you can see that thing poked above and it's falling back into the range. Now, the fact that we are still seeing risk-off sentiment in the markets, but that's not really translating in Swiss franc, it's just telling me that this thing is still range bound. We're getting shorter term moves. When market falls, we see a flight towards safety. So just like yesterday, we had yen go up, we had Swiss franc go up, and we had dollar go up, but they all very quickly reversed towards gains. So as far as the trend score goes, I'm really back to zero. Really, I think this is just a false breakout right over there. The only other place that we had a confirmed breakout, that was the euro. So you can see that euro kind of doing very similar to what the Swiss franc is doing, and it had a breakout. And this is again a good example because when that breakout happened, I mean that was a pretty quick, fast move to the upside. But again, now we are up against that resistance as well. So we have a lot of these overhead resistance where prices are stalling, and you can see that after that point, euro hasn't really gone anywhere. So if the euro wants to extend higher, I want to see that resistance getting broken. If it stays under that level, I need to maybe adjust my outlook on the euro as well, because again, it's not really that bullish or bullish currency here. It had a breakout, after a long pre-consolidation. We could again consolidate at these levels again before breaking out. Now, the talk about consolidation, we had the British pound that was actually, was the only other currency that had a good score. I mean, this thing is going sideways too. So trend score has definitely weakened. We went from all the way to 3 to now all the way to 0. Price action again is no longer, a bullish price action. This is more like a sideways price action. Now, once we go into the CAD, as you can see, CAD catching a little bit of a pop here, but overall, it's pretty clear where the direction is. Oil is definitely, picked up a little bit on this geopolitical concerns, and oil shooting up 12%. Maybe that's helping the Canadian dollar a little bit here. But if you look at the pattern overall, this is not a confirmed breakout. Now, when we go into the Aussie, well, what do you see? Exact same thing. Not a confirmed breakout and not a confirmed breakdown. So these support resistance level are definitely more stubborn and more strong here. So this is why I think across the board we need a confirmation. It's not about just touching the support or even breaking it intraday. You can see that the Aussie did break that support, but then it reversed a little bit of those losses there. So getting a lot of back and forth. And then lastly, the Kiwi, exact same thing. I mean, look at that. Like it almost looked like it was going to break out higher. And guess what? It just fell right back into the range. So I still think that range bound strategy is really the way to go here. It's not the directional market where you want to get in on a multiple days and look for that the big move. I think this is still the market where the opportunities are happening each maybe a day or two. That's pretty much it. So velocity is still the name of the game here.
And Ankit, as you went through all those, I just was struck with the feeling I've had for the last 2 weeks. I'm very clear on what I want to be short. I want to be short yen, and then I want to be short dollar second. Like that to me is like so crystal clear. But then when I go take a look at the currencies that I want to go long, I about throw up in my mouth because they all look lethargic and it looks like they are just so pinned in everywhere. And so it's like, okay, well, I've got a long currency that doesn't have any strength, but it's holding in, and I'm going to pair it up against a yen trade that, you need two of these. You need your long to strengthen and your short to weaken to make a good chunk of money. When that's not happening, it's just telling you it's just not there yet. I think, and again, this is just my opinion, but I think with the geopolitical worries and then all of the news we're getting this week, I can definitely see us singing a little bit different song next week. Be like, hey, things broke out. Let's go after the things that are broken out. Until then, though, I really only have one trade that I really like. It's short yen. That's it. And what I want to be long against the yen, euro is the number one thing on my board. But other than that, I think you got to take this day by day and just roll with the volatility. And look, there might be some peace, there might be more war. Use that to guide your trades. There's only one chart that I want to take a look at, and that is Euro Yen. So I like Euro to the long side, Yen to the short side. But take a look at this daily chart. Now we have broken out of some pretty big resistance here at the 164 area. So I do love the fact that we had this resistance for almost a year. And look how many times it met this resistance level and failed. We're now clearly above this. So I think you can say that this 164 has cleared and it should become a bit of a support level. Now, whether that's 164 and a half, 165, it's going to be in this area. But I do like the fact that we've cleared out of this major area. The problem is, you can see we're headed right up into its next area of resistance, where I think we're going to get some backing and filling. But look at the move after that. If we can break through that point, I don't see any reason why we can't get up here to the 168 level. And that's about 200 pips away, which I think is a good enough bit of meat on the bone to make this trade. What am I looking for? I'm looking for pullbacks and I'm looking for high base breakouts. I'd much rather get into a pullback here. You can see we got this little pullback opportunity down to 165. If we can get pullback down in this 165, 165.50 area, I think that's a good entry point because I do think this 164 area holds as support. So as long as your stop is under this 164, I think you're basically saying, I think that level is going to hold. This is the only trade I'm looking for, and you can see it's not even that great of a trade. I'd rather buy it on a pullback down here at 165 than chase a high base breakout here at 167 because I think 168 is its next level. Okay, what do you want to take a look at?
Hey Rob. Well, along the same lines, I would like you to take a look at Swiss franc yen. And just to, talk about technical perspective, I feel like this is a better looking chart. I mean, look at that, resistance level at 176, test a few times. That looks like a clear breakout to me. Now, what's the next level of resistance? It's about 179. So there's about like a 200 pip, 220 pip to be had over there before we run into the next year's resistance. But I mean, just looking at that chart pattern, that looks like a better clean breakout. Now, I want to talk a little bit more about Euro Swiss franc. Rob, if you want to pull up Euro Swiss franc, as we talk about those safe haven currencies, I've noticed that Swiss franc definitely does a lot better when there's a flight towards safety. I mean, you can see the candlestick last night. Look at the big candlestick we had over there. So initially, when that news came out, this was a much stronger price action that we got in the Swiss francs. So I think, again, if you're going after that risk off sentiment, I think Swiss franc probably better bet. And again, I think that's where Swiss franc yen was a better play there. But overall, if you just take a look at this one, I think it's just not really, it's just going sideways. It's not that euro is doing really well. I think I'm waiting for that to happen, but it's just stuck in that 150 pip range where it's just going back and forth. So I think you want to be kind of keeping the both door open for even the euro yen, even the Swiss franc yen, because I think there's just not a whole lot of divergence happening between euro and Swiss franc. But again, if it does break above that 94.40, I definitely want to be more interested in the Swiss franc, in the euro over the Swiss franc. If it breaks below that 92.80, I think that's where we probably see the ratio tilt towards Swiss franc. But until it's stuck in that range, I think you want to be a little open to both and just take a look at where the chart is. But for a risk off sentiment, I think Swiss franc is a better play here.
I would agree with that. And if you are looking to play a pure risk off, I think World War III has started. Again, that's your opinion, but you need to have your charts to back it up. I think going after looking at something like an Aussie Swiss franc, I think you could take a look at this one possibly. As you can see, we've just broken down from some support levels. Getting a little hammer here. We'll have to see what happens by the end of the day. But to me, if you're looking for purely what's going to move the most if things really get out of control, I think being long the Swiss franc is the right call, as Ankit said, for the risk-off move for sure. So sadly, the range-bound condition continues, but I do think we're going to have a different opinion next week because I do think we're going to get some moves out of all this volatility that we're seeing. As always, focus on the currencies in play. Don't try to play the things that aren't moving. They're not going to do you any good. You've really got to find the right pairs and then trade your charts on those pairs. Everyone have a great weekend. Goodbye, everybody.